Good morning. Thank you so much for being here today. My name is Kelly Reddy-Heffner, and although there is no one size fits all to your finances, we're here today to talk about a few things that you can do to get started to do the good things with your money. So last week we were on a trip to Italy, and we're departing from that quite a bit to get ready for tax season here today. So by now, you should have received most or all of your documents for 2024, and whether you're giving them to a tax professional to file your taxes or you're doing it on your own, it is important to be organized and have the documents together that you need. We do not prepare tax returns at Steel City Wealth Collaborative, but we do assist with tax planning, and we get asked quite a bit about what forms clients should be looking for, depending on what they did for the year. So this is meant to just be a high-level overview, not to displace professional advice from a CPA or your planner for some tax planning, but this will get you started. So in terms of income, if you are employed by an employer, you're going to be looking for your W-2. If you switch jobs throughout the year, you want to make sure you have your W-2s for each employer that you had in 2024. If you work as an independent contractor and you got paid over $600, if you got paid, $600 or more, you're going to be looking for a 1099 NEC. So that's baseline, what you want to be looking for in terms of income. In terms of banking and investments, if you had a high yield savings, money market accounts, U.S. savings bonds, treasury, things, you're going to be looking for a 1099 INT. So that's any of that interest that you might have earned. So we've had high interest for the last couple years. So if you do have money saved in those spaces, you are going to be looking for that 1099 INT. If you had dividend income in 2024, you're going to be looking for a 1099 DIV. Very creative naming nomenclature there. A 1099-B is if you had proceeds from broker, barter exchanges, stocks, bonds, contracts, debt, received cash, stock, or property due to acquisition, control, or a significant change in capital structure. A 1099-R is for a distribution of $10 or more from a profit share, retirement account, and any IRA, annuities, pensions, permanent and total disability payments under a life insurance contract, charitable gift annuities. And the last one that we'll talk about today in terms of banking and investments is the Form 5498 if you make contributions to an IRA. With the increase in the standard deduction, itemized deductions have significantly decreased by taxpayers over the last several years, but it's always good to compare your itemized versus what the standard deduction is each year so that you know which is the better option for you. Here are a couple additional forms and information that might be relevant to you. So if you own a home and are paying mortgage interest, that's going to be a Form 1098, typically if you pay interest of $600 or more. Don't forget to provide information on your state and local taxes as well in that process. There is a cap on how much you can deduct in the year, so it's good to have an awareness of that, but you do want to include that information. If there is education going on in 2024, was going on in 2024, you might have a 1099-E, which is about student loan interest paid. Again, typically $600 or more, can be total or individual students for your household. If you contributed to an education plan and paid tuition, if you paid tuition, you're likely to get a 1098 T as in Tom. So that's for each student enrolled. If you paid into a 529, you might not get a form for that, but you want to look up what your contributions were for the year and provide that information. Again, it has to be for qualified education costs, but you may get a state tax benefit for 529 contributions. Not federal, but hey, every little bit counts, so make sure you look up that information. If you gather these forms, and again, there can be others depending on your circumstances, but that's just to give you a high level of what to be looking for. But you get your tax bill and you have a tax liability for 2024 and kind of want to take some action for 2025. In addition to talking to a professional about your concerns or kind of the things that go on in a typical year for you in your household, I highly recommend starting with your W-4 with your employer and check your tax withholding. So again, there's things that you can do regarding taxes, but withholding the correct amount is a good place to start. So thank you so much for your time today. Have a great rest of the week, and thanks for being here.